Hello traders, this is Rich with Breathingwiththemarkets.com. Today is August 13th, 2025. Trader biased. Let's see where this goes. We can have a positive bias or a negative bias. Most traders that I know look left to see what they're going to do next. And then they form a bias. It's an opinion. It's not facts. Did price turn? What you see is not what you get. It did at that moment. Why did it turn? They come up with stories, excuses, something that sounds good. What's most concerning, it's not repeatable. Just because we have rejections high and low does not mean price is telling you something. The market's manipulated each and every day, each and every second. As soon as you think the market is going down, what happens? The market turns. As soon as you hop in short to take it short because you have this bias of what you see the past 3 or 4 candles, the market turns on you and you lose again. Just because you see a pump to the upside and you're following it, waiting to get in, waiting for another confirmation of another green candle. And as soon as you get in, what happens? You blow your account again, or you have another losing trade. This is a bias that you've created yourself. You're trying to out-manipulate the market. A trader can never out-manipulate the market. The market manipulates over and over and over again. The market's manipulation is unwavering. It doesn't matter who you are, how big your position is. Traders, you really need to think about what you're doing and how you're trading. If it's not objective in the market, it's not going to work. Are you able to really understand why you're entering that trade and where price is more than likely headed at that moment in time that you execute your trade? And ask yourself, why? Why do I think the market is moving short? Why do I think the market is bearish? Why do I think the market is bullish? Off of current price traders. Can you do that? Do you understand what you're looking for? Do you understand that you need confirmations? Do you understand that you need objective things in the market that tell you and give you a direction with a high probability? Biased. Looking at highs and lows all day long or overnight, marking horizontal lines is truly not going to get you there. Let me give you some examples. Let's take 2 traders. One trader only has $500. The other trader has $500,000. You have a support or resistance line, and price is getting ready to move there. And you're just going to take a bounce. Price bounces all day long, the entire time. 1 minute candle will bounce back and forth, high and low, for 60 seconds. So as price moves down to your horizontal line, or up to your horizontal line, a little bounce with $500,000 is money in your pocket for the day, and you don't have to trade anymore. Take that $500 in whatever position that you can buy with that, which is very little, depending on what you trade. You're going to need a huge bounce, not a little bounce. It is so easy for those who have a large bankroll to make money if they truly know how to trade. If they don't know how to trade, they gamble. And yes, they can gamble their way until their money runs out. I've said this over and over again. The less money you have, the better skill you need. And the more money you have, the less skill you need. You can buy the dips. If you bought the dips on your favorite stock or Forex pair, and it was a long-term investment, and you understood the way the market moves, yes, you can make money holding, swing trading, investing. That's what it is. It's now an investment. As soon as you enter a position in the market and you leave it overnight, and now it goes against you, you have now become an investor. Not a day trader, not a scalper, not intraday. It's all day and all night. Why would you sell when the market is down? If you believed in that stock or you believed in what you were doing, why would you get out? That's like having a stop loss, isn't it? I don't use stops. I understand where I'm at in the market. Will I get pinched? Absolutely. Will I lose in the future? Absolutely. Will I win every trade? No, I won't. These are the facts. Do I make the highest probability trades when I execute a trade? Absolutely. When I get bit the most is when price, that is the actual turning point of price, meaning that is the actual bottom or that is the actual top at that given moment in time on a smaller chart. And it literally pisses me off. Because it wasn't even time. For example, if I'm going long and I'm hitting it long, and I understand the market is long, and I'm in there deep, all of a sudden price turns, and that's where it starts to fade. Now that would really piss you off. That really pisses me off. There's nothing I can do about it. The market had no desire to continue at that given point. It's a fact. And it wasn't even time to short yet, because I look at the market in an objective way. I'm not even near where I need to short or want to short. Just because a market turns does not mean you short or go long in the market. The market is not set up that way. If you look at it appropriately and objectively, if you look at it in an objective way, you'll be able to understand that. The market turns up and down all day long. A horizontal line, there's millions of them on the chart. Draw 100 horizontal lines on a chart and keep them there. Put them on lockdown. You'll be surprised on all different time frames how many times your lines that you did, because you're a support and resistance master and you know exactly where to put that line, you will see rejections off of all of your lines. You will see things that you never thought you would see. And come to find out, you're going to see the same exact shit that people were talking about on YouTube, but they had you fooled. They had you believe that a high and a low is where you put your lines. It's a horizontal line. It's just a line on the chart, traders. That's all it is. It's a line on the chart, and it will have a rejection point. It's guaranteed. Now that's guaranteed in trading? Are you kidding me? Yeah, try it yourself. Try it. Put a line on the chart and go from the minute or second to the daily and see what happens with all your lines. See all the rejections on your lines. Who cares if it's yesterday's high? Who cares if it's yesterday's low? Who cares if it's last week's high or low? Asian market high or low? Who cares? It's the same thing. It's a horizontal line, right? It's where price moved. Wick, some put it at the candle, some put it at the wick, base of the candle, top base, bottom base. Doesn't matter. You throw a line on the chart opposite, in the opposite direction of price, you're going to have a rejection. It's a no-brainer. So where's the key to the market? Do you know? You need to find it. You need to seriously think about what you're doing in trading. Do you have the key? Do you understand the market? Can you look at the market objectively and understand what price is doing? Why you're not going long at this time, even though it's skyrocketing to the moon? Do you understand why you're not in there rather than following the herd that is not profitable? Because that shit's manipulation. And it will fade. And there's not a point in time that it's going to fade. Price fades. That's what price does. Shakes people out of the market, and it will shake you out of the market. You must look at trading in an objective way. If you are looking left, if you are looking at old price action, you're not trading, you're guessing. That is your opinion. That is your bias. You have created a positive or negative bias. If you're looking left at price action, highs and lows, breakup structure, you are forming a bias, positive or negative. That's a fact. Just because you think it broke structure on the way down, you think now all of a sudden it's bearish. Price is supposed to be bearish. And why? Because that's what everyone says. You go back in history, it's not true. Why is that? Price can break a low, and then when it breaks a low and doesn't continue down, they call it, oh, it's a liquidity sweep. That's what it is. You see it broke the low here, and now it's sweeping the low in liquidity, now it's going to go the opposite direction. So now they have two excuses as to why price broke and continued down, or swept and went back up. That is a bias. It is positive or negative. Anyone can tell you and give you an excuse or give you a reason why price turned looking at a chart that already printed the candles. Anyone can tell you that they would have taken a trade here or there. And the reasons why, because they have all the information sitting right there in front of them. And it just takes a little time in the market to all of a sudden learn. It takes a little time in the market to learn these words, these buzzwords that other traders know, so you can sound real important and bullshit your way through why you would have taken that trade. That's a fact. Find the keys to the market. Find the gems in the market. What you hear on YouTube, this $1 million strategy. Let's state the facts. Let's just state the facts. There is no $1 million strategy. You have to have money in order to make money. That is a fact. If you don't have the money, you shouldn't be trading. That doesn't mean you cannot work on your skill. You could still be on a demo or a practice account and save a bankroll and invest your money if that's what you decide to do. But if you're just spending your money each and every week to try to gamble and hit a home run, it's not going to work. Leverage is important. If you're at a prop firm and you're going to leverage and you buy a $50, $100, or $300 account and you have leverage, respect the leverage, because they over leverage those accounts. They want you to blow up. Why would they want you to blow up? Would they admit it? No, they won't admit it. But when you blow up, it puts money in their pocket. And they know, and not to say that they're bad people, it is a business product, right? It is a business plan for those gamblers. And all of a sudden, when the gamblers start to get payouts and they're trading 20 accounts at a time and they're blowing and going when they have these flash sales, and you can buy 20 accounts for $190 or $380 for 20 accounts, and you pass them in 2 days, now you're on the books for 20 accounts at Apex, for example, whatever the cost is. Say it's $35 account. $700 will get you 20 accounts, and you pass them in 2 days or 1 day. You load up, you understand the market, pass it in 1 day. In 1 day, you've invested $700, 20 accounts, and now you have 20 funded accounts. It's unheard of. That's so far from reality that it suckers everyone in to the market. That's why we have gambling. Because any regulated broker, you couldn't have 20 accounts. You couldn't afford, I'm not saying you personally, but 99% of the people could not afford trading 20 accounts with the leverage that they offer you in hopes that you blow up the accounts. It's a double-edged sword. They can't have it both ways, traders. You have to really pick what side you're on. Traders need to stick together. Companies change their rules to meet their needs. They're not changing the rules to meet the traders' needs unless it's still beneficial to them in some way, shape, or form. I mean, it's simple business 101. A company must stay solvent. And they have all the data. They have all the records, the traders. And, average payouts. They have average payouts per month. They have an average of how much they're paying out, how much they're bringing in, how many repeats, everything else, and they're crunching the numbers. And if they look at all these numbers and you have great traders in one area, they start flunking them off, finding ways and excuses to get them out because that attacks their bottom line. Who wouldn't do that? Do you believe these people when they get on YouTube and they get on a podcast and they start talking? Unless their system is completely automated, don't believe them. And I'm talking 100% automated, where it is the same for every trader across the board. Doesn't matter if you're an affiliate. All these affiliates get free accounts and they give them away. Then they have more people watch their live stream and they all say that they're working for free and they're making bank from all these affiliates. People buying accounts. You have people quitting their job and becoming a streamer and an affiliate to try to make all the money. Money hungry, man. No skill, they're just looking for the money. Then after they reach the milestone, they claim that they're the greatest trader in the world. They claim that they made all their money in trading. They had no skill. Not to take it from those who actually know how to trade, because no one would be offended by what I say. And if they do get offended, then there you go. He or she's one of them. Because if you know how to trade, you don't get offended. Someone says you can't trade, who cares what they think? Right? But when people are out flaunting money around and trying to scam others for signals groups or courses that you can read and you can actually get off the internet or YouTube, there are a lot of books out there. You don't have to buy a mentorship. You can buy a book. Unfortunately, if you truly understood how the market moved in an objective way, you'll find that a lot of this shit is opposite of what you're supposed to be doing. Yeah, it's crazy. The opposite. Why is that? It's what I see. 95% of the herd is not profitable. Then what is true? If you did the opposite, every time you took a trade and you did the opposite thing, when you thought you were supposed to go short because your mind and your bias told you that price is moving down and it looks to me like and it looks to me price is weak and bearish, I'm going to take a short here. Every time you did that, if you would have went long, ask yourself, would you have a negative P&L right now? If every trade that you took, you did the opposite, you would have a positive P&L. More probability than not, right? If you have a negative P&L right now, or a negative trading strategy, and you did the opposite, what would it be? Only you know that. You have to be honest with yourself. If you're not going to be honest with yourself, how can you learn? So if that is true, that you would more than likely be break even or positive if you took the opposite trade every time that you decided to get in the market, then your strategy, I hate to say, is fucked up. It's pretty fucked up. You have to be honest with yourself. You do not have the key to the market. And it is very important that you understand that if you want to sit there and journal, ask yourself simple questions. No need to journal. Ask yourself simple questions. You must understand why you lost. If you take a trade, every time I take a trade, I understand why I'm getting in the market. Do I get pissed off sometimes? Do I get pissed off sometimes when I get a flashbang candle? Absolutely. Do I turn into a trader? Do I turn into a different trader at that given point in time? I can, and it wouldn't be a profitable one. It would be a lucky one. So, trading the open, trading the end of day, and trading midday, all of them are different. If you understand the market and how it moves, and how it repeats itself, and you're not willing to wait for that, you really have no one else to blame but yourself. Maybe trading is not for you. If you cannot wait, maybe trading is not for you. Unless you have all the money in the world, you're retired, or this is a hobby, whatever the case may be. Nobody can tell you that what you're doing is right or wrong on how you invest your money. It's your money. If you wanted someone to invest your money, you would contact them, right? They would have to have a license and everything else. I wouldn't give money to anyone without a license and credentials and everything else, and insurance and security and all of the above. Read all the disclaimers. Trading can be hard. Trading can be hard your entire trading career. But you need to really step back and look, why did I make this trade today? Did I do exactly what I was supposed to do? If the answer is no, there's no reason to sit there and continue to digest the negative shit. If the answer is no, that you didn't do what you were supposed to do, you need to fucking move on. You can't sit there and keep ingesting that negative trade, the negative decision. You need to think about positive things. Go and look at a trade where everything worked out and only use that trade if you followed your plan. If you didn't follow your plan, that trade's fucking useless also. That's how it works. You must build transparency for yourself. You must be honest with yourself. You are the only one with the key to the market. You have the lock and you have the key. The only way you're going to unlock, the only way you're going to become profitable, successful, break even. Wouldn't it feel great if you were just a break-even trader? Think about it. So you lose some days and you win some days, but overall, during the week, you come out break even. And I'm talking about zeros or $5 ahead. Not down, but break even. And you continue to do that over and over and over again. Break even, break even, break even. There is just something little that you have to figure out to get over that hump. Now, you might be lucky if you're gambling, but if you're trading in an objective way and you're winning 6 out of 10 trades and 4 of them you're not sticking to your plan, there's your answer. Do the math. The math does not lie. You must do the math, traders. Look at the math, not the pocketbook, not the rewards. I was up on one account today, $1,700. I could have taken a payout on that account. What did I do? I wanted more. Well, before I even tell you, you probably know what happened, because I wanted more. The market's not always going to give you more. 1,700 wasn't enough for me. So I lost that account. Stupid? Yeah, hindsight, right? Hindsight, stupid, yeah. Did I have the direction right? Absolutely. Was it bullish? Absolutely. Was it moving up? Absolutely. Did I have several times where I could have got out? Absolutely. But it just was not where I wanted it to go. I wanted it to go higher. I wanted price to go higher. I wanted price to go higher. Whenever we say I want, I know, I should have, I could have, I would have, I think, we're fucking wrong. I've said this over and over and over again. We're wrong. $1,700 flickering several different times, and I didn't take it. Stupid. Looking back, for me, it's stupid. You can call yourself stupid, admit that you fucked up, then you're going to move forward. If you're going to find excuses as to why you lost your trade, remember, I had the direction right. I had everything right. I understand the market. But what I didn't know, and I didn't have a crystal ball that I could get a few more points out of it. I didn't know that. But I had the direction right, and it was pumping. It was seriously pumping and priming. And price pushed back on me a little bit. Not a big deal, because I had the direction. But it would quickly wick up there and come back down. Quickly wick back up there on a different candle, come back down. Quickly wick up, come back down. Gave me some objective evidence in the market that price was more than likely, with a higher probability, going to continue up. It did. It wicked high. It wicked pretty good, but it was so fast, nothing I could do. And then the market turned. When you have size in the market, that's what can happen. I trade with size. I was in that trade probably 5 minutes on a minute chart. It's a long time. And I had 5 minis in the market. So 5 minutes, 5 minis, and up 1,700. And I should have taken it. But I didn't. Nothing I can do about it. But I'm not going to sit here and worry about it. It's not what you do as a trader. Whether it be 5 minis in a market, or 5 micros, or 2 micros. Take the profit. Just take the profit. Bag it. Just bag it. But once again, that was not what I was looking for. So I own it. It's not what I was looking for, and I understood the risk and reward. And I'm okay with that. So if you understand the risk and reward, then you must trade according to your risk and reward tolerance. Don't try to trade like others. Don't try to be like others. Stay in your own lane. If you have a little bit of money, then you need to trade conservatively, pick your shots, take your profits, and move on to the next trade. That doesn't mean overtrade, because if you're not following your plan, period, you're already overtrading. If you don't follow your trade and make one trade a day, you're overtrading. Overtrading is not a matter of numbers. Overtrading can be one trade, because if you didn't follow your plan, that one trade is overtrading, because risk starts before the execution of the trade, not after. Not after. And mind you, on that account that I lost, I was only negative I think $700. So I had a $2,000 drawdown on that account, and I was ended up being like negative $700 on the account. So, that's the difference. So was that slippage? I don't know what it was. The bottom line is, who knows? You can't figure it out. But what I do know is I lost that account. Not a big deal. Not gambling. I understood what I was doing, where I was at, and what I wanted, based on objective facts in the market. And I was right where price turned. So that happens. So traders, you must ask yourself, do I actually have a plan? Is it objective? Can I go back in history? And does it repeat itself over and over and over again? There are gems in the market that nobody talks about. And I have some mentees that, even though I show them the gems in the market, that they get focused and hone in on the gems, but it's the entire puzzle. You must have the entire puzzle that fits together to have the highest probability trade available at that moment in time. It could be on any chart, any symbol, anytime. London, New York, Asian, doesn't matter. A chart is a chart. Each and every day, we must practice on a still chart. We must look on a chart. It's language. It truly is a foreign language. And if you want the key to the lock, to prevail, to succeed at trading, you must put in the work. You have the key. It just doesn't fit. You need to earn it. No one's going to give it to you. If you're following somebody that's giving you trades, telling you what they're going to do, and you're following in discords where someone is telling you why they're going to get in at this area, remember, they may or may not have a lot more money than you. So if they lose, they're taking that trade based on their financial situation also. And it might not match yours. And more than likely it doesn't. You may have more money than them. Or they might not even care about the money. So there's a lot of factors when someone takes a trade. This is why I don't, before the market open, tell the mentees what I'm thinking, what I'm doing, how I am setting up for the market. They learn that on their own. I teach them, and they must practice. And they're doing the same exact thing that I'm doing. And they're taking the same trades from time to time. Sometimes they'll gamble, but I don't teach gambling. I teach a specific skill, objective facts in the market. And if you continue to do that over and over and over again, it will become boring and it's repeatable. Most importantly, every trader must wait for their plan. If their plan is not objective, it sucks. Lowest probability. Absolute lowest probability if it's not objective. Think about it. Whether you like to hear that or not, I wish you well. Peace, traders.